Good evening, everyone. Welcome to Let's Trade Live on the 8th of May. This is Wayne, Head of Research and Education. On behalf of Fullerton Markets, I warmly welcome everyone. So as usual, the webinar will be divided into 3 segments. The first segment will look at the past 1 week events. And the second segment will look at the upcoming calendar. And finally, the last segment will move on to the charts to look at the trading opportunities based on the requests from all of you. And of course, I'll take any questions that come along the way. So let's move on to the first segment. Of course, the first major event, yes, for some of you who have been following us on our Facebook and newsletter, the first major event of last week, of course, is our Fullerton Leaders Summit. We had our first Leaders Summit, and at the same time we celebrated our first birthday. So it's our Fullerton Market's first anniversary. The actual date is 8th of April, so we celebrated last month. A full house event, very happening. So a lot of good feedback from attendees of the Fullerton Leaders Summit. Everyone is looking for the next one, which will be next year, of course. Yeah. Then, of course, the calendar is the first central bank that released their policy statement is Reserve Bank of Australia. They maintain their interest rate unchanged. Of course, the key thing to take note, as you can see over here, their governor, Philip Lowe, actually warned of the rising debt level, as you can see in a Bloomberg chart below that plotted the debt level. So is issuing a warning saying that the current low interest may not be forever. So market is sort of taking it as a hint that maybe RBA is looking at increasing interest rate sometime. Of course, no one knows when is it, but if the central bank actually warns that the low interest rate may not be forever, of course, that could be taken as a slightly hawkish bias in a way. But it doesn't mean that they will raise interest rate. It depends on the situation and the economy. So this is one thing to take note of. For now, we do expect RBA to maintain their interest rate for at least the near future. Of course, the next central bank that released their policy is Federal Reserve, the Fed. Again, as expected, they maintain their interest rate unchanged this time round. But interesting thing to take note of is the Fed officials, as you can see highlighted over there in this Bloomberg report. Federal Reserve officials were unusually explicit in their statement released on Wednesday following the 2-day meeting. So indicating that a disappointing first quarter will knock the committee off its path to raise rates 2 more times this year. So interestingly, they so-called downplay the weakening in the first quarter. So they are still on path for 2 rate hike this year. So as you can see later on, we'll look at the non-farm payroll and we'll talk more about a possibility of a rate hike in June. Then of course, next towards the end of last week is the non-farm payroll. The numbers came in at 211,000, far way above the market expectation. And the unemployment rate also went down to 4.4%. So this is very interesting. However, they revised the March number lower as well to 79,000. So it's sort of a mixture to the data. So as you can see, the declining unemployment chart shown, it is the low since the crisis in 2008. So employment data is pointing to a very good figure, and after that, actually market is pricing in quite a high chance of a June rate hike. So as of now, it is as close as around 75% of a chance of a rate hike in June. So that's the non-farm payroll. last weekend, and of course over the weekend it is the French election, and early this morning we know of the result. Emmanuel Macron actually won 66% to 34% as expected. So some of you are watching the market, maybe expecting euro to rally after the result. Unfortunately, that wasn't the case. So as we have highlighted numerous times, that the forex market are traded based on expectations. So for the French election, the expectation is that Macron is likely to win. So if the actual result is as expected, market may not move much. Move much. We have seen the euro dollar retracing instead on profit taking. So there's so much for French election, and of course, what does Macron winning the election means? That means the euro are free of one political risk. Macron is pro-EU, and he will work hard to reform and work to strengthen relationship with EU. So let's see when he's in office what kind of policies and changes he will make to help France economy turn around. So that being the second largest economy in Europe, that definitely will boost the euro on a long run. So there's so much for last week's events. Let's move on to the calendar for this week. So for this week, we see that on Thursday, 11 May, this is GMT plus 8 time, basically correspond to China, Malaysia, and Singapore time zone. On the 11 May, 5 a.m., it is basically the Reserve Bank of New Zealand releasing their interest rate and policy statement. So of course, as widely expected, market is not expecting RBNZ to make any changes to the interest rate. So however, you never know, central bank may surprise the market. In this case, let's say if they surprise by cutting interest rate. So this is our suggestion to put a pending short on the Kiwi dollar in case central bank surprise the market by cutting interest rate. So that will be the suggestion for Reserve Bank of New Zealand. And towards the afternoon or evening, it is the Bank of England interest rate decision. So for Bank of England, their economy data is quite upbeat, even while Brexit is still on the table. The key so-called uncertainty would be the election next month. So Theresa May has called for a snap election on 8 June. So that is about exactly 1 month away. So of course, based on the current data, it is all pointing or favoring the sterling with the 3 PMIs outperforming. Basically the services PMI, construction PMI, and manufacturing PMI. And also their inflation is hitting their target. So in this case, there's a good chance for the Bank of England to be hawkish this time round. That's our suggestion, a pending long on pound dollar in the event they surprise the market by increasing interest rate. Although the chance is slim, knowing that the election is only 1 month away, it is pretty, in our opinion, it is pretty unlikely Bank of England will change their policy so soon. But you never know. Never say never in the financial market. So this is our suggestion, a pending long pound dollar. If it's greater than 0.25%. Of course, if it doesn't fulfill this criteria, we have to remove our pending order. Of course, the other data to take note of at the same time, evening 7 p.m. is the Boe Mpc Vote. So this vote is voting for rate hike or rate cut or maintain interest rate. So as you can see, there are 9 members in the MPC. So the market is expecting 1 out of 9 members to vote for rate hike, whereas the other 8 members to vote for unchanged interest rate. So that's what the market expected. So if there is any change to the number of people voting for rate hike or rate cut, that will have an impact on the sterling as well. So this is our another suggestion. At the same time, if the Boe Mpc vote for rate hike increase by 1, meaning to say instead of 1 member voting for a rate hike, there are more than 1 member voting for a rate hike, then possibly you will fulfill our criteria for this pending long sterling dollar. So however, if they maintain a vote of only 1 member, then it doesn't fulfill the criteria for this pending long order. So take note that the interest rate and the voting happens at the same time. I mean, the data are being released at the same time. So our suggestion is either one of the criteria is fulfilled would fulfill the criteria for this pending long sterling dollar. So there's so much for the calendar for this week. So before I move on, just to highlight, this is our Accelerator Bonus, most popular bonus that our clients like. So this is available, and you may check us out at the fullertonmarkets.com/promotions. And the other announcement I would like to make is we have very proudly have Jimmy to join us. So I believe some of you have received our newsletter. Jimmy is ex-Bloomberg strategist, so we are very happy to have him on board. And he will be having his debut on the 15th May, which is next Monday. So both of us will be hosting the webinar next week. So look out for it. Do not miss out the webinar. Finally, we're moving on to the third segment. Let's go to the charts. So before I open up the chart, let me just screen through. There is a very interesting question. I have difficulty understanding news trading. How to plot the setting on the graph when the news is about to hit before the time, and how to put a pending long, etc. Okay, since this is a very interesting question, I'll take some time to explain how I personally trade the news. That is for your consideration. So of course, before I go into the actual way of me trading the news, I wish to highlight that news trading is highly volatile, because when the actual data is being released, there's a good chance that the market may move very fast in a short span of time, thereby resulting in what we call price gap and slippages. So these are the possible risks that any trader should be aware of when you are trading the news. So if you are new to news trading, we would suggest that you observe the market first, see how the spread so-called behave. Spread may widen due to the sudden movement of the price, especially when data is not what the market expected. So spread may widen, and price gap may happen, and thereby resulting in price slippages and things like that. You may not be able to get in and out at the price that you want. So these are the possible scenarios that any news trader should be aware of. So let me highlight again. If you are new to news trading, watch how the market behaves just before and after the news of major news, and then do some demo and practice trading first before you embark on using your live account to trade the news. Okay, now move on to show how I personally trade the news. I will use the BOE Bank of England example. So that suggestion is based on a pound dollar. So I'm going to open a pound dollar chart. So typically for news trading, I would go to a lower time frame. So typically maybe the 5 minutes chart. So I'm going to change some settings so that okay, this is show us line. Okay. At any one point in time, the market has the bid price, which is the selling price, and the ask price, which is the buying price. Two prices are moving in tandem. So when you trade the news, it is always good to display the ask line. So once you enable the ask line, you will see something like that. A silver line or a gray line and a red line both moving in tandem. The difference between these two lines is basically the pip spread. So it is very visual. When the spread widening, you see these two lines opening up. So that will tell you that how much spread has widened up and things like that. So it is very visual. So I usually put on the ask line when I trade the news. So how do I trade the news? For example, the price now, because the news is happening at 7 p.m. GMT plus 8 time. So assuming the vertical line on my chart is at 6:55 p.m. So usually when I trade the news, I will do it 5 minutes before. I'll watch how the price move and I decide where to put my pending order. So this is the current price. So the suggestion is to put a pending long order. So the current price is about 129.49. Okay. Of course, the price is moving as I'm speaking. So it could happen when during just before the news, 1 or 2 pip plus minus moving up and down. So for pound dollar, it is a more volatile pair. For more volatile pair, I tend to pen with a higher number of pips. That means when I put my pending order, I pen it further away. So usually for pound dollar, I'll pen it about 12 to 15 pips away from the current price. So if the current price is about 1.2946 or 47, then my pending order would be around 1.2960, about 12 to 15 pips away. So that would be my pending order price. So of course, even after you put in your pending order, the price is still moving. So I would need to modify my order accordingly. So usually for news trading, I would also enable what we call one-click trading on the MT4 platform. So of course, if you want to find out more about one-click trading, you can always view our MT4 videos, which is available in Fullerton Suite to all our clients. Okay, find out what is the one-click trading. And you can also try out one-click trading using a demo account first. So in summary, the one-click trading basically allows the trader to modify the pending order or any trade simply by click and drag, and it will shorten some of the process like closing the trade and things like that to lesser number of clicks. So it can shortcut some process in a way. So for news trading, it is very important because you have to react fast. So for those of you who have tried one-click trading, you can click and drag the pending order. And once you click and drag, it will modify by itself instantly. So it's very convenient for you to modify your order using one-click trading. So I will keep on modifying. So if I see the price heading towards my pending order and the news is not out, very important, it is not good to have your pending order triggered before you know what is the actual data. So I will have to shift constantly my pending order depending on the market price. So now the market price is 1.2949, so I could maintain at 1.2962 thereabout. So that would be how I set my pending order. Of course, then comes the stop loss. For me, I usually set for news trading. My stop loss will be typically between 30 to 40 pips. 30 pips if the currency pair is less volatile, 40 pips if the currency pair is more volatile. So in this case, for pound dollar, I usually set a 40 pip stop loss for news trading. So once my pending order is there, I will have to open a news calendar. So the news calendar that we use is from fxstreet.com. So fxstreet.com, you can refresh the screen to look at the latest data. So once the data is out, then you decide whether the pending order should be kept there or be removed. So if it fulfills the criteria, you can keep the pending order there. If it doesn't fulfill your criteria, then you have to delete the pending order as soon as possible. So again, if you have a one-click trading enabled, you can delete the pending order just by clicking the mouse. So that's basically how I decide how to place my pending order for news trading. And of course, that being said, there are other criteria once the trade is being triggered, what happens and things like that. So I would have to manage the position, especially for the first 1 hour of the news. Because if the news fulfill my criteria and my pending order is triggered, then it depends on how the price move within that 1 hour. Have to look at the price action to decide whether to exit the trade or to hold on to it for another hour and things like that. So it is not so straightforward for my method of trading the news. Of course, you can always choose to make it simpler. So once you put a pending order, you set a stop loss, you set a hard target. So a simple way is you set a risk reward of 1:1.5, meaning to say if your stop loss is 40 pips, you set a profit target of 60 pips. And then if the trade trigger your pending order, then there's only two possibilities, whether it's hitting your stop loss or hitting your target. So there's no further management of your position after that. The question, so my pending long is referred to bid price, not ask price. The spread is not being considered. Okay, that's why I say 12 to 15 pips. So if you consider the spread, then it could be 12 pips. And if you doesn't consider the spread, then would be 15 pips. So usually that is that plus minus 2-3 pips that covers the spread. So it is up to individual whether you want to consider the spread or not. And because our suggestion is always on the surprise side where the market is not expecting that kind of data. So if it really fulfills our criteria for the kind of surprise trade, there's a high chance that the market will move quite significantly. So even if you set your pending order another few pips more than other trader, there's a good chance that you can still grab a decent profit out of it. Will G7 meeting on this weekend make any impact on Monday market open? I personally do not expect much impact from the G7 meeting on especially the currency market. Just like the past G7 meeting, there haven't been any major decision that caused any significant market movement. So for this time round, we do not expect much decision to be made that will impact the currency market. But having said that, there's always uncertainty. So knowing this big event, then as trader, it is very important to manage your risk, whether you want to hold any positions over the weekend. Okay, so that's much for news trading, and I will take on the request from the screen. So the first one is Euro Yen H4. Okay, let's look at Euro Yen H4. Okay, this is basically Euro Yen H4 chart. Vertical line is the time of the webinar. So as you can see, the Euro Yen has been going up, leading up to the French election. So now the result is as expected. So there is quite a fair bit of profit taking from the market. So resulting in a drop after the so-called election result. This is one of the typical sell the news kind of phenomenon. So in any case, do we as traders start to short the market because it's coming down? It is on the contrary. If it is profit taking, we don't see any fundamental reasons of reversal, then it could be giving us a good chance to look for a long trade at lower price. So Euro Yen at this moment, we do expect the uptrend to continue, because it should have a pretty good effect on the euro on the mid-term at least. So now the question is, at what price do we look to go long? So I'm going to zoom in and take a look at some key levels. Okay, for Euro Yen at this moment, the 123 seems like the area to watch out for. Of course, just give me a moment. I want to highlight a few more levels. Because of the sharp movement upwards, there is a possibility that the profit taking may cause the euro to weaken more than just this much of what we're seeing on the chart. Okay, I've marked two so-called regions on the chart. Okay, I see quite a long pause there, almost 1 day of price pause. Okay, what I've highlighted, the three levels or three region, 123, 122.40 and 121.80. These are the three areas to look out for, in my opinion, to look out for long trade. Okay, I'm going to put my comments. So this is the 3 areas to look to go long. So one way of looking to go long is using a bullish candlestick formation around those prices that you see. Alternatively, when the price is within the 121.80 or 123, this region, you can leverage on some indicator to give you a bullish signal to go long. That's another option. So either look for bullish candlestick patterns or use indicators to look for bullish signal. Okay, or whichever indicator that you are using to look for a bullish signal. The time where I will be a bit cautious to go long on Euro Yen is if the price breach all the way lower than 121.80. So once it closes below 121.80, I will want to watch the market. There may be some things that is happening already. So that's the time I would scout the news to see anything is happening in the market. So that's Euro Yen for me. The next currency pair on my screen is actually the Aussie dollar H4. Okay, let's look at Aussie dollar H4. Okay, this is Aussie dollar H4. For those of you who have read our research for this week, we are slightly bearish on the Aussie dollar. If you want to find out the reasons why we are bearish, you can always refer to our research, which is available on our website. You just go to fullertonmarkets.com, click on education, and then click on blog. You should be able to access our weekly research. So I shall not explain why we are going short. So I'll just tell you where I would look to go short instead. Okay, price found a resistance around this region. So around 0.7420, that's the immediate resistance I'm seeing. So there's a immediate support over here. Okay, 0.7380 is the nearest support. So as you can see, the price is trapped within my resistance and support. It is nowhere. So if I take a trade now, then even though it could be a bearish engulfing kind of candlestick pattern, but if I take a trade now, the risk reward of this trade will be against me. Chances is I need to take about 40 pips of stop loss, and by it hitting 10 pips, I need to at least protect my position already. So a 4:1 risk reward, definitely not an ideal risk reward in my trading plan. So I would prefer for the price to really close below the support before I consider any short. So the price would be, okay, I'm going to use green color to denote entry. Okay, if the candle close below 0.7380 into where about 0.7368 or lower, that would be my signal to go short. Alternatively, another way is wait for candle to retrace back up towards 0.7420 and consider going short. So that would be two suggestions. So if it goes to 0.7420, again wait for a bullish pattern. So where if the entry price is around 0.7410 plus minus, that would be easily maybe 25 pips stop loss against a 25 pips profit kind of trade. So this is Aussie dollar for us. So let's look at the next symbol. Okay, the next symbol on my screen is Euro Dollar H4. Okay, Euro Dollar H4. There's a few requests on Euro Dollar H4. And again, for those who have actually read our research, you would have known that our bias for Euro Dollar is, it will be similar to Euro Yen. We are having a long bias. That means a buy on dips. So when price retrace downwards, then look for an entry to go long. So in the case of Euro, the price is at my so-called okay. So the decision area is about 1.0950. And price seems to be breaching that decision level for lower movement. So the next area to watch out for Again, it is a bit similar to the Euro Yen kind of cases. I would highlight another two regions for you to consider entry for a long trade. So instead of repeating myself, I'll just put here similar to Euro Yen, basically the three regions, 1.0950, 1.0890, and 1.0850. However, if the candle goes below 1.0850, then I will be more cautious to take any long position. So as long as the price maintain above 1.0850, I'll still look for any bullish signal to go long. So this is the three region. Can look for bullish candlestick formation or indicator that gives you a bullish signal. So that's my take on Euro dollar. The next pair is pound yen H1, and another request is pound yen H4. Okay, in that case I'll open up the pound yen chart. Okay, what we have here is pound yen H4 and pound yen H1. Quite similar in a way, both charts. It's just that H4 looks like a more steeper so-called uptrend than H1. Okay, for pound yen, definitely I will still trade along the trend on a technical so-called basis, but do watch out for this month. Like I say, leading up to June, there's always uncertainty when it comes to election. Even though that market is not expecting Theresa May to lose at this moment, but you never know. When it comes to uncertainty, there is a chance that market may sell first, and then while waiting for the actual result. That's one. Or they may buy into any rumors saying that there's almost very high chance that Theresa May will win in the election. Then similar situation may occur to the sterling, just like what happens to the euro. People are buying it even before the election result is out. So having said all this, based on the current price action, that would be this is the immediate decision region. So if you look at the very refined price action over here, okay, there's a decision region around 145.95. So if the candle closes above, okay, if the candle closes above, let me see what's the price. It is not too far off. Okay, so if the candle closes into maybe 146.01 or above, that would be my signal to go long. Okay, let me shift the price label out a bit instead of blocking the view. So once the price goes lower than 145.70, that would be my signal to short instead. So when prices close to 145.61 or lower, that would be my signal to go short. So that's pound yen for me. The short trade basically is in anticipation of any uncertainty, or do take note, if you are trading the pound yen for this week, there's always the BOE interest rate and policy announcement on Thursday. So whatever I mentioned for these two entry, it is before the BOE interest rate announcement and policy announcement. So on Thursday, depending on what they announce, that will definitely have a different impact on the sterling yen. Okay, I'll put here of course, if let's say tomorrow or the day after it triggers my entry, so my position would be hanging inside or could be hanging inside until Thursday. So if that kind of scenario happens, I will have to manage the position accordingly. I will have to make a decision whether to exit the position before the interest rate, or shift my stop loss to protect my position first. So of course, this will be based on at that point in time what is happening, or how is the price, or where is the price, before I can make the decision of what to do. So this is my take on pound yen. Okay, Okay, there's two interesting instrument. Okay, I shall look at both of them. Gold and oil. Okay, so I'm going to open up the gold chart and the oil chart. Gold chart. Oil chart. Okay. Okay, the gold request is also on H4. The oil request is on H1. Fine. Okay, this is a gold chart. So we have seen the gold is losing some favor since mid of April. So dollar looks like dollar strengthening. I mean against in terms of gold wise, gold price is dropping. So if you look at this movement on a technical basis, definitely will be looking for a short as well for gold. But interestingly, if you look at this trend line, price now is quite a fair distance away from the trend line over there. So there is possibility that price may retrace towards the trend line as well. So this is, and price now is in a very tight consolidation. I personally choose to ignore the weird candle. As you can see, the price went across the weekend, so there's a gap downwards after the French election, but very quickly in less than a few hours the gap actually closed up. Okay, gold is in $12 consolidation. Okay, technical wise, this is where I would if the price close above to 1238 or higher, that would be my signal to go long, expecting price to hit to around this level maybe. $1256. So the first target would be slightly below 1256, maybe around 1253 or 1252. So if it fulfill my criteria to go long, that would be my first target, 1252. And for a short trade, then I'll take reference from the weekend opening. or this week's opening price, which is around 1223. So if the price closed at 1223 or lower, that would be my signal to go short. For me, I would find it a challenge to trade within this consolidation of 1235 and 1227 because gold is considered pretty volatile as well. So to trade within this consolidation, chances is I need to set a wider stop loss, thereby giving me a not so favorable risk reward. So I'll choose to trade the breakouts instead. So this would be my take for gold. And for oil, okay, interestingly, for oil has been dropping. We have seen how oil has dropped. Of course, the main reason is because of the renewed production from US side. So we have known that the OPEC has agreed to limit their production in a way. They have agreed last year to limit or make it stagnant. So OPEC side is so-called taken care of, and that's the reason we see oil price recovering last year. But early April or so, there's news that the US may start to produce or increase their production for shale oil again. That's why market feels that it will negate the effort from OPEC to limit their production. So that's why we see a drop in oil prices. And of course, OPEC will be meeting later this month as well, and it is widely expected that OPEC will extend their production restriction for another 6 months. And news has been hitting the wire saying that even for Iran, they will so-called, they are in favor of limiting the production as well. So it is good news if later this month OPEC really extend another 6 months on their production. There's a possibility of seeing oil price recovering again. So for now, based on technicals, it is still a downward movement. So let me mark some interesting regions. So for oil, like I say, towards the end of this month, later this month, OPEC is having a meeting. So if you are shorting oil, then always prepared for a reversal to hit your stop loss. So in the first so-called signal that you feel that you may be wrong in your trade, you may want to cut your losses ASAP if you are holding a short position. Okay, because of this predominant downtrend, we feel that maybe before the meeting, market force may push oil price towards $44 again. So if the price movement move to the green box, which is maybe $45, $45.90. If the candle close into the green box or lower, that would be my signal to go short. And for me to decide to go long is somewhere the green box. Okay, I'll put my comment there. For me to go long, I need to see a bullish candlestick formation. Okay, so for my long signal, I need to see a bullish candlestick formation. Either the typical one that I like is the bullish engulfing. So this would be my take on oil for this week at least. Okay, let me just quickly scan through the questions one more time. So there's a question, can we long euro pair, as now there are so many news for the euro. Like I say, our direction is we look to long euro when there's a price dip or after the price dip. So that means when the price is dropping, we look for an entry to go long. So of course, while the bearish momentum is still strong, I personally would not go in for a long. I usually wait for a turn or at least a show of a bullish candlestick pattern at least before I'll take my trade to go long. And how about the next day? News on Aussie dollar at 9:30 a.m. It says forecast 0.3% and previous is negative 0.1%. So I believe the news that you are referring to is the Australian retail sales data. So of course, it doesn't mean that every data that may cause movement in the market. So retail sales for Australia, unless there's a big deviation from what the market expected, then we do not expect much movement on or much impact on the Aussie dollar as well. So market is expecting 0.3%. So in my view is if the actual data deviates more than 0.3% from it, then it may cause a significant movement. If the actual data is 0.4% or 0.2% plus minus, market may choose to ignore it or choose to have a little reaction. So very quickly, we have come to the end of our weekly webinar. So remember, next week we're going to have the debut of our chief strategist, Jimmy. Do not miss our next week's webinar. So this is Wayne signing off. On behalf of Fullerton Markets, I wish everyone a good night and hope what I have shared in the last 1 hour will set all of you up nicely for a profitable week. So good night and bye-bye.